evening. You've joined us right here on After the Bell. I'm Ilan, and quick check of the top stories we are tracking this. On to other news from Earnings Corner, and BPO major WNS has come out with its Q1 earnings today. We're now joined by Chief Executive Officer Keshav Murugesh on this, and my colleague Kritika Saxena will be taking us through the interview. Kritika, over to you.
Many thanks for that, Ilan. Keshav, I'm coming to you directly. My first question is, on a Q-on-Q basis, revenue in US GAAP terms have fallen by around 21.2%, and in non-GAAP terms, they have jumped by around 3.7%. Can you give us an idea for why the dip in the US GAAP numbers has happened? This largely is owing to the repair payments made in the auto claims business, I'm assuming.
Right. So we have a unique business, which is an auto claims business, where we have both revenues as well as repair payments paid back to our vendors. Effective this quarter, there is a change in the accounting there, and therefore from a BPO business point of view, I think the way you need to look at us is essentially around our net revenue. And from our perspective, net revenue for the quarter actually increased year-on-year close to 10% and sequentially close to 3.7% from 94.3 million all the way to 97.8 million this quarter.
Okay. Keshav, also on the margins front, you'd given out wage hikes. Of course, there's been a certain amount of pressure due to that, and also a certain amount of pressure due to currency volatility. Margins are at around 31.7% versus around 30% last year in the corresponding quarter and 34% last quarter. What is the reason for the Q-on-Q margin dip? Is this purely wage inflation, or is it due to a certain amount of currency volatility as well? And can you factor both the segments for us?
Yeah, okay. On a quarter-to-quarter basis, that is, same quarter last year to this quarter, we've actually improved margins by 80 basis points because of higher revenue. On a sequential basis, gross margins have declined by 480 basis points, essentially because of the wage increments, which are partially offset by higher revenue.
Right.
But what will happen in our case is, as we've already completed the wage hikes. Over the rest of the quarter or the rest of the year, we actually expect to see better margins going forward, and we're actually shooting for something like 32-33% overall margins.
Okay, and by when could that be achievable? Is this a FY12 target that you would be looking at to reach the 32 to 33% margin point?
Yes, Kritika. The WNS actually is transforming itself dramatically. Absolutely. And we're investing significantly in sales and marketing, as well as our new offerings and vertical programs. And in spite of all these investments, we are actually expecting margins to start picking up, and that is actually built into our new guidance numbers that we released today. So we've actually upped our guidance.
Okay.
So at the midpoint of the revenue range, we've actually upped guidance, close to 397 million, which is up from 369 million that we declared last fiscal. And again, from an overall adjusted net income basis, we have provided a guidance of $43 to $47 million for the year. This is after taking in all these expenses and expectations around margin improvement.
Okay, just a quick point then, Keshav, you spoke about transformation in your business. You told me earlier that you have restructured your business into specific verticals. Can you give us an idea about how that has reflected into numbers this quarter, and by when will the restructuring be completed?
Actually, I would say that as of now, WNS has restructured itself completely. We are actually delighted to see the progress that we're making as a result of that transformation. We are probably among the first companies to now go to the market from a BPO point of view, which is completely vertically aligned around 6 key verticals, with our horizontal offerings actually matrixed across those verticals. Our sales program is, has kicked in very well. We've actually upped our sales staff numbers from 41 people same time last year to almost 67 people now. We're investing significantly in talent and technology and transformation solutions. So you can actually see that all of this is now reflecting now in the exciting top line that we're beginning to see, as well as the profitability numbers that we're beginning to see, across each one of our businesses.
Okay, Keshav, how's pricing looking like currently? Are we expecting to see a pricing uptick?
For us, it has been quite stable.
Okay.
For us, it has been quite stable, and
All
we've
right.
actually been able to, extend our contracts with our top 10 clients with
And you've added 6 clients this
improvements
quarter.
or at least stable pricing.
All
Yes.
right. All right, Keshav, just a quick word then. My last question to you, divided into two. You have a debt of around $70 million on books. You have cash currently of around $30 million. Any acquisitions planned out? Because, there have been some of your peers that have been extending their limits. They've started including IT services as well. Is acquisition something on the agenda to beat competition right now?
Right. First, a quick clarification. Last quarter, we were at 74 million in terms of debt. We paid off 20 million last week, so we're now down to 54 million in terms
All
of our
right.
debt.
All right.
And in terms of acquisitions, absolutely, we're always opportunistic and looking at anything that is interesting.
All right.
But having said that, our focus is completely on organic growth for now. But we will be opportunistic if something interesting comes up.
All right. Many thanks for speaking to us, Keshav. Always a pleasure to talk to you. So, Alan, WNS is optimistic about the next 1 year. It has upped its guidance and expects to expand its margins and sees a positive pricing environment going forward.
Right, Kritika. So wage increments impacting margins, but the company is hopeful that the restructuring will bring benefits to the top line. Well, that's, of course, WNS's quarterly numbers. But coming up next and after the bell, more from earnings.